Alright guys, welcome back to episode 5 of the Playbook. Today we'll be going through liquidity. I've actually already recorded this once, felt that it wasn't that good. That's why this video is being released late and not over the weekends. Also, as you can tell, it is 2 a.m, almost 3. Are we vibing? Anyways, today is a huge topic. We're gonna be going through liquidity, and I'm not feeling well. You don't need to know that, but alright. Anyways, we'll be going through why this matters, what is liquidity, how does price hunt it, where it is, and why you need to know it. So without further ado, let's get into it, man. Now, have you ever wondered why price seems to fake you out just before the real moves happen? Well man, that ain't random, it's liquidity. Today I'll be breaking down the idea of liquidity and how to start seeing what the market is actually doing. So, now what is liquidity? Liquidity is, simply to put it, just where other people's orders sit, like buy orders or limit orders or stop losses. It's just basically where there's a lot of money in the markets, and price tends to target those areas because without the liquidity, price can't move, and they just act as fuel. So you just gotta imagine the market like a predator and liquidity is the prey. That's how price moves. And yeah man, simply put it, liquidity is just where stop losses, entries are at. And that's it, man. Now, how does price hunt it? You've probably seen those spikes where price hits your stop loss. I mean, if you have been trading and then moves perfectly to wherever your TP is. Well, that's a liquidity sweep. We'll be going through that later. Stay tuned for that. But the market takes those orders and feels what we call smart money, which is essentially what the banks and institutions are, and then it makes the real move to wherever it wants to go. This is why timing matters, and you gotta enter after the liquidity sweep so that you don't become exit liquidity for the banks and institutions. You want to be trading with them. You got it? Alright. So that's how price hunts it. Alright. General areas of liquidity and where liquidity tends to hide. I'm not going to be going too in depth with this because I have another episode called Key Areas where I'll be sharing more about it. But liquidity just often builds up at obvious places like equal highs, equal lows, swing points where many people put their stop losses at. And you also notice that before the big moves, the market often sweeps an area to grab liquidity first before going to wherever it wants to go. And you don't want to be in that position, man. My chair is hella uncomfortable now. The hole is huge, bro. Anyways, later in the playbook, I believe it's episode 13, we'll dive into the exact areas, price targets, previous highs, session levels, news event, all that. But for now, just remember, liquidity builds where people cluster orders And if you remember the previous episode, we talked about highs, up and a down. The highest point of those two candles, that's the high. We also talked about lows, down and up. Right here, down candle and up candle. The lowest point of those two candles, that's the low. Swing highs are just the obvious highs and lows. Hold on, man. Like, there's a lot of highs here, but the swing highs is right here. It's the most obvious high. Swing low is right here. Swing low is right here. It's like super obvious, man. Yes, this is a high, up and a down candle. Swing high is right here. Swing high is right here. So these are your swing areas, your swing highs and lows. We also got equal highs and lows, like right here. This ain't a low though. I mean, that ain't a high. Don't think I can seem to find a equal high, because they aren't really always there, unless I'm just blind, bro. Yeah, this one right here, equal highs or relative equal highs. As you can see, equal highs definitely want to get ran through some point. You gotta recognize when though. We'll get into that next time too. Anyways, where were we? Where my text at, bro? Alright, we've gone through where it is. Now, final points before examples will be why you need to know it. Now, if you trade into liquidity, you're likely gonna get trapped. But if you wait for liquidity to be taken and structure to shift, which is your break of structure, we've gone through that in episode 3, I think, or 2. I don't know, man. But your break of structure, if you wait for it after the liquidity sweep, now you're aligning with the smart money, which is how banks and institutions trades, or the big monies that cause the market to move. We call them market movers. And understanding this helps you become more patient because you stop chasing moves and start waiting for the right context, which is really important in trading. Because, for example, we talked about break of structure. If you just get a random break of structure out of nowhere, it's likely not going to be a winning trade because there's no context for it. But if it comes after a liquidity sweep, then you're going somewhere, man. Alright, I'm gonna give you an example on ENQ right now. On the 4 hour, we've got high time frame lows right here. Damn, bro. Jesus Christ. I just spilled water all over my mic, man. Let me clean this up real quick. Hold up, guys. My whole pants is wet. Anyways, we got 4-hour lows right here, which were this don't matter. We got high time frame lows right there. Price sweeps the low. We look out the lows. And for me, the easiest way to recognize whether it's a sweep or not is by the reaction out of it. You can tell. In episode 2 or 1A, 1B, we talked about we talked about bodies and wicks. Price pushed all the way down here to take out the lows. And we know that because the wick is all the way down here. And then it closed up here, which is way above this area of liquidity. So we know, okay, this is a potential sweep. From there, what do? We wait for a break of structure. Up and a down candle, the highest point of those two candles. That's a high. We got a break of structure here. Why? The candle closed above this high. The body has to close above the high. Please keep that in mind. And what does it do? Takes out all these highs right here. Like all of that shit, man. I'm not gonna be saying you should trade this because this isn't enough. Because as you can tell, there's been many sweeps. And we'll get into how to take a trade way later in the future. You gotta be focusing on your confluences and your experience in the market, how to recognize these market conditions before you should take a trade. So yeah, man, do not take this trade, at least for now, because we're gonna be aligning high time frame with the low time frames. That way you can take intraday trades that last for about 30 minutes, honestly 10 minutes to an hour. That should be the range you should be trading in. So yeah, liquidity is just where money lies. I'm gonna give you an example here. Alright. So, people like to say trade with the trend, which is a good thing. But there's some people we call retail traders, which are just idiots. I'm sorry. I mean, we ourselves are retail traders, but we want to be the smarter side of the retail traders. So, what happens here? When we close above these highs, most people want to go long. Put the stops at these lows and target whatever draws on liquidity they want to. And what happens? Because we closed above this high, that's when they entered, or somewhere around this range. Stops here, they're gonna get stopped out. Also, some people are gonna want to take shots in these areas. They want to be trading the retrace or whatever. What is wrong with this shit, bro? They're gonna put the stops at the highs. Maybe target this or whatever. And what happens? They're gonna get stopped out right here. And eventually price is gonna move into their favor. That's because they don't have the context of when to trade. They know price is going there, but they just don't know when. And that's what we want to be aware of. And that's how we can capitalize the most out of this. Because with liquidity sweeps, this is why I love it so much, man. You're essentially trading the bottom or top of the move, which is great, man. You're gonna be capitalizing the most out of it. I mean, of course, we're gonna have later entries because we want to be cautious, or depends how you want to trade. I mean, some people would trade off just liquidity sweeps, but I would say those people have a lot of experience. That's why they can do so and turn profitable. But if you're just starting out, I would say you should be more cautious and gain market experience while doing so before you tweak your strategy or your trading style, whatever it is, man. Bit under the weather right now. Feel I'm getting a fever. I had a fever 2 days ago. That's why I couldn't record this video. And I had work. If you saw my TikTok, I'm working 12 hours a day for like 3 days straight. It's great, man. No biggie. Anyways, is that all for liquidity? Yes. In episode 13, we're gonna be talking about more draws on liquidity and key areas, which is essentially how you want to, where you want to take your trade off. And we're gonna have different areas, so you have more potential of taking a trade. Not really, but just why price will react off those areas. And if they do, you have a potential trade you can take. So yeah, man. Anyways, this is just the first layer. In episode 13, we'll go deeper. I'll show you the key areas where price loves to target over and over again. And if you ever wonder why price reversed there, chances are it was one of those key areas. Save this video if you want. And once episode 13 is out, you'll start connecting all the dots, which is great. Then you'll start to understand everything I've been talking about. Yeah, man. I think that is all for the video. Nothing much I gotta say. Anyways, hold up, man. I'll give you more examples. We got 4-hour lows right here. We took out these lows. We broke structure to the upside right here. Up and the down. This is the most recent high that hasn't been broken. We broke structure here. What happens? Took out the draws on liquidity, which is this high, which is technically where we're at right now. I might be trading today, but I'll talk more about that later. I won't be free this weekend again. Got work to do. Toughy, man. Recently we just took out these highs. That's why you gotta be aware, man. Even though we took out these highs, it doesn't mean we're gonna be we're gonna be taking out the draws on liquidity all the way down here. It could just be for a retrace, which looks like it was. And we're gonna extend higher, preferably today, because if it always wants to take out liquidity, you're gonna have a market that looks like this, man. Always takes out liquidity. That's have you seen a chart do that? If you have, you are dumb and hallucinating. Anyways, I do not trade support and resistance. I'm not saying it's bad. I'm not saying it doesn't work. I'm just saying I like to trade what makes sense and what I understand, which is liquidity sweeps and other confluences like fair value gaps and others, which is what we'll be going through next episode. That's gonna be like a 3-part video, man. Or not. Yeah, I'm gonna make it a 3-part video. Fair value gap imbalances. Yeah. Alright, man. That is all for today's video of liquidity. Hope you enjoyed this. Hope you learned something from it. If you did, like and subscribe. If you didn't, like and subscribe. Also, I'm gonna leave a link of my socials in the description. You can follow my TikTok if you want. I'm really active there when I have time. You can drop me a DM. I'm gonna reply every one of you. Sweating buckets, man. It's hot out here. It's 3 right now. Anyways, I'm probably gonna be recording the fair value gap video later. Like after this video, after I edit it and post it, because I might not have time the rest of the week. So I gotta do what I can. Anyways, man, hope you enjoyed this video. I hope you learned something. Save this video till episode 13 comes out. And I'll see you then. See you in my next video, man. Bye bye. See you.